it was important to decide this today because it gives market clarity, it gives the market direction, it gives the market a vision of where we will be heading, and therefore it enables people to understand how progressively that supply would come and how cautiously it will also come.
Let's bring out Bloomberg Intelligence commodity strategist Mike McGlone. So, Mike, we know that this obviously doesn't change the longer-term structural story for oil, but how does it change things in the short term?
Well, hello. I think the key thing to think about is crude oil has been an enduring bear market, and it's come up to the upper end of the range. And OPEC has finally disagreed to bring more supply in the market, and there's way too so much optimism for more demand. I think the key thing to be thinking about here is crude oil risks are more on the downside, most notably following copper and lumber and corn and soybeans have all made new highs, and crude oil has been the outlier. So as Kathleen mentioned, the high last week was around 75. Right now we're seeing 71. And a very good way to look at the futures of crude oil is backwardation. If you look at crude oil a year from now, it's closer to $64 a barrel. And I think that's the greater risk that it heads down that way.
The greater look is that it heads down. How do you see the supply-demand balance right now, Mike? Because our Bloomberg opinion columnist, Liam Denning, writing that he thinks this is just a short-term truce, it won't last. And he even brings in the question of trying to reduce emissions. How much oil can be pumped? How much supply can there be when there's a push back against that?
Well, he's dead right, and the big problem with OPEC is they're probably not going to agree, and the history is this is the greatest amount of discipline ever, and we expect more supply. Remember, they're a cartel that's holding supply off the market. The OPEC spare capacity is the highest in its history, so all that is going to come back on. It's eventual. Right now in the U.S., the price versus the cost of production is the highest in our database since 2014. So unless free market capitalism and pure supply and demand doesn't work, maybe prices go higher, but the average price for crude oil the last 5 years is around $50 a barrel. I think it's going back to that level. I think it's very unlikely to get above 100. And the one thing that's happening with higher prices is supply will come on from many other sources. It'll come back from shale. It'll come back from Brazil. It'll come back eventually from Venezuela, from Iran, from Iraq, and tar sands of Canada. So elasticity of supply in crude oil has been its bane of its existence for the last 10 years, and I fully expect it to continue to kick in.
Mike, even when it comes to the post-pandemic surge in demand, right, are we reaching a peak for that? You take a look at declining bond yields. Is that a leading indicator for what we could see in the oil market?
Oh, well, thank you for bringing that in. To me, that's been the best leading indicator. Look at the trend in crude oil since 2008. It's been down with bond yields. And to me, that's a leading indicator of what's happening. The market's turning back over to deflationary trends. Bond yields are the indication. Last year, when the 30-year dropped below 2%, that was an indication of risk off. This year, I see why it's still the same thing. So that long bond is, closed about 1.92%. Crude oil around 75. If it does what I think it's going to do and just go back to the mean, that means the long bond drops closer to 1%. So crude oil is completely dependent on a higher stock market. The correlation is the highest ever. It's dependent on demand to come back. And remember, there's still too much optimism for that. And the world changed. People don't have to go to the office as much anymore. They're not going to be driving. And I think that trend in morbid demand before COVID is going to accelerate. And then supply, we just got prices the highest levels in 3 years. So elasticity of supply means plenty more supply, and OPEC just signaled we've got more to bring in the market.